Hi guys, hope everyone is keeping well and safe. In this video, I'll be walking you through a simple breakout strategy that incorporates a lot of the concepts that I use in my own trading. I'll be using TradingView for this example because I quite like their bar replay function. So first of all, for any breakout strategy, we want to see the market consolidating in a trading range. And a really important factor to note is the longer the time spent in this trading range, then the stronger the subsequent breakout signal will be. I like to think of these ranges as a battle between the bulls and the bears. When you have a long drawn out battle, when one side eventually wins, the other side will usually capitulate and you'll see the start of a strong trend. Let's take a look at the price of gold in early 2018 on a daily time frame. We can see that the price was consolidating in a range of about $60 for the first 4 months of the year. So let's start by drawing a box around this range. Now let's walk forward, and what we want to see is the price to close outside of this blue box that we've drawn. We can see that on the 1st of May we got a false break where the price broke out to the downside but then closed back within the range. If you ran a scalping bot that took a trade as soon as price breaks out of these ranges, then you'll probably get caught out quite a bit with these false breaks. That's why it's usually a good idea to be patient and wait for the confirmation when the price convincingly breaks out of this range and closes outside. Let's walk forward a few more days, and on the 15th of May, we finally get our first confirmed signal of a breakout. It looks like the bears have won this battle, so we want to join the winning side and start looking for short trades. The first option is to just enter short on the close of this bar. For our stop loss, we can either set it a little bit above the previous high, or for simplicity we could just use the middle of the box. And that's because if the bulls manage to push the price all the way back to the middle of the range, then this battle probably isn't over just yet. For the take profit level, we're just going to measure the height of the box and we're going to extend it from the bottom of the box to get our take profit level. The reason for using the height of the box is because it represents the largest move during that entire period before the price pulled back. So we can see this particular trade has a risk to reward ratio of about 1.1. The second, and usually a much better option to enter this short trade, is to wait until the price comes back to retest the edge of the box. Because when the price heads back up to this level and starts heading down again, you have a previous level of support turning into resistance, which is a stronger confirmation of your short trade. And if we use the same stop loss and take profit as the previous trade, we can see that just having a slightly better entry converted our 1-to-1 trade to a almost 2-to-1 trade. And this will make a massive difference in the long run. Now obviously not all breakouts will come back to retest the range and you may miss some trades, but I think you'll be surprised with how often this actually occurs, and it usually pays to be patient and wait for a better entry. So let's keep going and see what happens in my cherry picked example. And a week and a half later we have our retest. So you could have used a limit sell order and that would have filled automatically once it retested that level. So both trades are live now, but the first trade is already at a bit of a loss. So let's walk forward and see what happens. Another few weeks after the retest and we have our next big move down. At this point, because the price closed on a new low, it's generally a good idea to take some risk off the table and move our stops to the break even. Let's keep going, and 2 weeks later our take profit finally gets hit, and the price almost immediately reverses back up. But please remember, this is an idealized example and not all entries will be this clean. We're not finished yet though, because after a successful breakout trade, we can use some of the profits that we just banked and look for another short entry on the pullback. You'll notice I have two moving averages on the chart here. The orange line is the 20 EMA and the green line is the 50 EMA. We can afford to be a bit more aggressive on this entry because we've just banked some profits, so we're going to enter another short trade as soon as the price crosses above the 20 EMA. For the stop loss, you can place it above the previous high, or you can be a bit more aggressive and use the 50 EMA as the stop loss level. For the take profit, we can use our measuring stick again and just measure it from the entry level. And the risk to reward ratio on this one is about 3.5 to 1. Let's keep going, and only a week later the price makes a new low and we can already move our stop to break even. And another few weeks later our take profit finally gets hit for our second winning trade. And the price actually goes a bit further before pulling back this time, but let's not be too greedy. By this point, after 2 winning trades, we're already quite a fair way away from the original breakout range. So I won't actually be looking to enter short again when it pulls back to the 20 EMA. And you can see that the price stalls here and starts moving sideways after pulling back. So what we can actually do is just draw a box around it and wait for the next breakout signal. This time, the price actually breaks out to the upside and we get a long signal. So let's quickly set up our trades again to see how this plays out. Just like before, you can enter long on the close of the bar and set the stop loss to the middle of the box and measure the take profit using the height of the box for a risk to reward of about 1:1. Or we can set a limit order and wait for the retest, and we get a much better risk to reward ratio of close to 2:1. Let's keep going, and about 2 weeks later we get the retest. So both long trades are now live, and this time the price actually tries to go back into the range but never actually makes it to the middle of the range. A few weeks later the price closes on a higher high, so let's move the stop to break even. And the take profit gets hit not long after that. Let's wait for our next long entry on the pullback to the 20 EMA. Again, let's use the 50 EMA as the stop loss and the height of the previous range as the take profit. This one actually didn't take long to make a new high, so we can already move our stop to break even. And we can see that the price hits our take profit level before reversing pretty much all the way back to our entry point. Again, I must stress that this is an idealized cherry-picked example, so not all of your entries will look as clean as this. And of course there will be losing trades as well with this strategy, which is why you should always do your own research and backtest the strategy thoroughly before actually trading with it. If you want to see more of this type of content, then please hit the like button below. And I'll promise to release a new video if this gets to say 500 likes. Otherwise I might just have to retire from YouTube, but we'll see. If you've watched my other tutorial videos on my channel, then you should be able to quite easily create this bot in cTrader. I've actually coded up a basic version of this bot, which I'll be sharing on the Google Sheets workbook with all my existing members. It's quite basic with only about 30 lines of code, but it actually does most of the things that we talked about in the video, including waiting for a confirmation of the breakout, entering on the retest with a limit order, setting a stop loss using the middle of the range, and calculating the take profit using the height of the range. And it also enters a trade on a pullback following a successful breakout trade, which is the slightly trickier bit to code. But I definitely recommend taking the challenge and having a crack at it before looking at my answer, because that's the best way to learn coding. And if you ever get stuck, you can always hop into our helpful Discord community, and either myself or other experienced traders and coders will be able to help you out. Just one final note, once you have the bot, you can test it out on different markets like Forex and even crypto. It also works on the lower time frames, but I wouldn't suggest going below say the 1 hour for this strategy. And you can also try to enhance the strategy by incorporating volume into the breakout signal, but I'll leave you to explore that one. Thank you for watching, and I'll hopefully see you in the next video.